Good morning, friends. I hope you are having a good weekend and a pleasant Sunday. Now, this is the weekly wrap. It's very uh, critical point that we are standing in the market because things are very overstretched. Now, the problem here is that they can get even more overstretched. And the other issue is that you cannot take fresh positions assuming that it will stay that way. So let me explain what we are trying to get at. Excuse me. Here, now let's start with our S&P 500 chart. This is the daily S&P 500 chart, not moving as sharply as the Nifty, but you have a big solid bar on the weekly chart on S&P 500. Okay, let's look at the Nasdaq 100 chart because that is the one I track. Again, bit of underperformance compared to S&P 500, but again moving higher. Now let's look at the Nifty. I mean, this sort of vertical chart I have not seen very often in my trading career. 11 days, 1100 points. Now the issue is that this is a large cap index. It's not a mid cap stock. The problems that are there with this rally is that it is being led by 5 to 7 stocks which are FII favorites. Let's look at the weekly chart here. On a weekly basis, while it's been an up move of hardly 2 weeks, the amount of distance it has covered is quite large. On a monthly basis, we are now getting into this zone of resistance, which is the 12,400 zone. So it is not wrong to say, given that you had 5 months of 1, 2, 3, 4, 5, 6 months of continuous rally. And hardly, this 1 month, one red bar doesn't really call for much. FII figures for Friday were negative. Okay. Now let me show you uh, the way individual stocks have gone up. This is the chart of HDFC Bank. The 20 DMA here is at 1070 thereabouts. The price is 25% higher than this. Vertical, non-stop. This is a crazy move. Let's look at HDFC. Again, from 1600 you are up to 2000. This is one of the largest stocks. Now I have the top 10 rates here. So Infosys, again, the last 10 odd days, you had a 15% rally. ECS from 2300 to 2900. This is a 30% rally. Big rally on ICICI, almost 25%. Hinge Unilever, not much. Kotak Mahindra, not much. Bharti, weak. ITC, weak. So basically, of the top 10 heavyweights, hardly 5 stocks have contributed. Mid cap, small cap are not going up. Let's look at the Bank Nifty. It has gone up 3,500 points from this low. The 20 DMA here is about 23,000. Okay. Again, you are trading away from the averages and closer to resistances here. Some sort of consolidation stroke correction should be imminent. On the Nifty, the 20 is at 11,430. You are 500 points higher. Now you see the question becomes that how do you create a trading strategy in this sort of a market? Should you sell? Should you buy? In my view, if you are long and long from say a week ago, 11,800 now becomes your trailing stop. Okay. As long as that remains, you keep your long positions. Fresh long positions should not be taken. And the reason is this gap in the averages. Short positions, again, one method is that if you are a well capitalized trader, you can scale into short positions, start taking slowly put positions on the upside. Or if you are sort of an inexperienced trader, again, for the moment, 11,800 becomes the price where the market weakens substantially for you. So below this point, you take short positions. As far as resistances are concerned, I would like to use the pivots to measure resistances. The resistances for the week are Let's go to the weekly pivot and show you 12,084 to about 12,254 are resistances for this week. The support for this week is 11,600. Okay. For tomorrow, resistances are 11,966. These are all cash levels, and 12,020, which is R2. Now let me show you something interesting, that last week the R3 of the weekly was 11,853. We closed beyond the R3 of last week. Now, what does this mean? This means that the market overstretched last week, and it is possible that from the R1 of next week, you may have some sort of consolidation. The important issue is what? That don't act till the market gives you confirmation. Okay. Yes, we are overstretched. Yes, an overstretched market can become more overstretched. So you can decide that I will not take long position. That is under your control. But from where the market has to turn, that is not something under your control, and you have to wait for the market to indicate. Similarly, on the bank Nifty, again, I would think that we got our level on Friday. You will take short positions only below the 23,100 or broadly 23,000 type of zone. Till then, you should not be taking short positions. If you want a better level, I can give you 23,500. As long as we are above 23,500, you remain long. So let's freeze this level, that 23,500 is your trailing stop on Bank Nifty, and 23,500 is that level below which you start to take short positions. Okay. Again, on a weekly basis, the Bank Nifty has resistance now at 24,400 and 24,980. Okay. On a daily view, the Bank Nifty has resistance at 24,123 and 24,400. Okay. See, the most important bit here is that you have a narrowing market. Now, a narrow market can last for a bit. Last year we saw hardly 20 stocks kept on taking the market higher. This time it is 5 to 7 large stocks, but the Nifty is going up. So the only message I have is no fresh long position, tighten your stops to Friday's low, and for short positions, scale in slowly or wait for the market to reverse below Friday's lows. Okay, you could have some more upside of the order of 100 to 150 points, and from those levels you will start to see sell off, because I would think This 12,000, 12,200 should have way more sellers than you had earlier. So as the markets go up, the number of sellers will increase, but let the market confirm to you. We want to see some red days before we conclude that the market is turning. That should be it for right now. Take care, trade well, and please consult your financial advisor.